Welcome to the TeraWulf Business Update conference call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then 1 on your telephone keypad. To withdraw your question, please press star then 2. Please note this event is being recorded. I would now like to turn the conference over to Sandy Harrison, Vice President of Investor Relations at TeraWulf. Please go ahead.
Thank you, Matt, and welcome to TeraWulf's Business Update call. I am Sandy Harrison, VP of IR, and joining me today on today's call is Paul Prager, Chief Executive Officer, Nazar Khan, Chief Operating Officer and Chief Technology Officer, Kelly Langley, Chief Strategy Officer, and Patrick Fleury, Chief Financial Officer. I want to remind everybody that during today's call, we will be making forward-looking statements. Forward-looking statements are neither historical facts nor assurances of future performance. Instead, they are based only on our current beliefs, expectations, and assumptions regarding the future of our business, plans and strategies, projections, anticipated events and trends, the economy, and other future conditions. Because forward-looking statements relate to the future, they are subject to inherent risks and uncertainties, and changes in our circumstances that are difficult to predict, many of which are outside of our control. The company's actual results and financial conditions may differ significantly from these discussed during today's call. Additional factors that could cause actual results to differ from forward-looking statements can be found in TeraWulf's S-4, respective supplements, and other SEC filings. Our comments are as of today, and TeraWulf does not assume any obligation to publicly update any of these forward-looking statements, whether as a result of new information, future events, or otherwise, except as required by applicable law or regulation. With that, I would like to pass the call over to Paul Prager. Paul?
Good afternoon, everyone, and thanks for joining our call today. Clearly, this is not the preferred market environment to provide a business update. We've seen tremendous market turbulence in the last several months, weeks, and days, even today. And it's with that backdrop that I would like to reiterate with confidence TeraWulf's vision and strategy, highlight our recent accomplishments, and provide an update on the continued progress at our 2 large-scale facilities. Following my remarks, Patrick Fleury will provide some detail on our recent financial developments and outlook. Well, Patrick recently joined TeraWulf as CFO. We've had more than a decade of working experience together, and he brings tremendous energy, investing, and capital markets expertise to our team. I'll touch a bit more on that later. For those of you not familiar with TeraWulf, we're a team of energy executives with decades of experience in energy infrastructure, operations, and engineering, with many of us working together for over 15 years, building and operating energy infrastructure assets. This is what we do. With the emergence of the digital asset ecosystem, we recognized early on the unique opportunity to leverage our unparalleled energy infrastructure background and bring our proven business model to the digital asset and Bitcoin mining markets. Today, we are developing the premier digital infrastructure platform for sustainable, zero-carbon Bitcoin mining. Our vision is to own and operate vertically integrated, infrastructure-focused, and environmentally sustainable Bitcoin mining facilities powered by nuclear, hydro, and solar energy, with the goal of utilizing 100% zero-carbon energy in the United States. We have 4 core tenets that are the very foundation of our business. First, people. At the end of the day, the execution of a strategy comes down to people, and I believe our team is a distinguishing factor amongst our peers. Together, we've been developing and managing energy infrastructure for more than 30 years. This is what we do. We are fluent in the procurement of sustainable power at scale and for extended periods of time. We understand risk and how to effectively mitigate it. Our team also has the unique experience of having built one of the largest Bitcoin mining facilities in the United States. Our cohesive leadership, financial and operational discipline, along with continued investment in our people, is what enables TeraWulf's superior execution. Importantly, we have dealt with brutal markets in the power side and energy, and want to assure our investors that we will approach the current volatility in the marketplace with the same measured and thoughtful problem solving we have for the last 20 years. Second, plugs. I am regularly asked by investors about the importance of our vertical integration or our infrastructure-first strategy. We see this approach as a critical differentiator, particularly now, with energy prices surging and the market awash in miners without a place to plug them in. While the availability and pricing of mining machines can fluctuate and the window for capital resources can open and close, the bricks and mortar infrastructure and the associated investments and equipment operate on a timeline that must be carefully planned well in advance and then executed upon. With inherent risks along the entire value chain, we believe that Bitcoin mining can only be successfully executed with a vertical integration strategy. Third, power. At TeraWulf, I see Bitcoin mining as converting a local commodity that cannot be stored into a global commodity that is a store of value with untapped potential. It's also about stability and decarbonizing the grid, and thereby making it more reliable, sustainable, and cost-efficient. By virtue of being a flexible load, TeraWulf provides a valuable and nearly instantaneous load balancing resource to the grid, thereby enabling further decarbonization as more intermittent resources such as wind and solar are introduced to the generation supply stack. And fourth, priorities. Our focus on zero carbon energy and sustainability is part of a set of broader ESG principles that have not just been an ideal, but are part of our everyday decision-making process and practice. These principles and practices are designed to ensure a long-term sustainable business based on transparency, diversity, and focus on the environment. Our zero-carbon platform reduces the binary risk of environmental regulation, which in turn leads to a lower operating cost for our mining facilities. We proudly focus on each letter within the acronym, whether it be through our large-scale zero-carbon facilities, the TeraWulf Charitable Foundation, or having a meaningful portion of our leadership team comprised of women, on average, who've been with the company 15 years. In short, we believe that mining companies that have a cohesive and experienced management team, infrastructure-first strategy, controlled large and scalable sites, and zero-carbon energy resources will be in the lead position to provide the most sustainable, efficient, and highly flexible platforms, and will ultimately emerge as the winners in the crypto mining space. As it relates to recent developments, we've been busy. Since our last call, we have advanced on multiple fronts, which I will review. We've strengthened the management team with the appointment of Patrick Fleury as CFO. Patrick brings 22 years of financial experience, including both principal investing and advisory roles. He spent the majority of his career at Blackstone's global credit platform, GSO, where our team was engaged to operate a portfolio of power assets in the U.S. and overseas. Patrick's background, his knowledge, and familiarity of the capital markets is already being felt here, and we are seeing his impressive and positive impact. Ken Dean, who previously held this role, has been appointed to Chief Accounting Officer, and I believe these two gentlemen will provide the company with the strong, transparent financial stewardship needed for a rapidly growing new public company. On the financing front, despite the extremely volatile market environment so far this year, we brought in additional equity and have reached an agreement in principle to increase our debt with existing lenders. I'm pleased to say that this latest capital nearly closes the gap on completing our 210 megawatts of infrastructure to be completed this year. Patrick will talk more about this in a little bit. We've also made significant construction progress at our two facilities, Lake Mariner in New York, which is 91% hydro, and the Nautilus Cryptomine in Pennsylvania, a joint venture with Talen, which is directly connected to the zero-carbon 2.5 gigawatt Susquehanna nuclear power plant. These two sites provide a path to 800 megawatts of net mining capacity by 2025 that, based on the current generation of miners, would yield a net hash rate of 23 exahash. Finally, I'd like to briefly comment on New York's recent legislation limiting certain proof-of-work cryptocurrency data centers. Importantly, this does not impact our Lake Mariner facility. Our business model, properly anticipated policy and legislative efforts like these, which are squarely aimed at operating data centers that utilize behind-the-meter fossil fuel power. Lake Mariner is not on that level. So whether or not New York Governor Hochul signs the fossil fuel moratorium into law, Wolf will continue to lead the pack. On that note, I am pleased to now pass the discussion over to my partner, co-founder, and good friend Nazar Khan, TeraWulf's Chief Operating Officer, who will share a little bit about the status at each of our sites and our infrastructure-first strategy. Nazar?
Thank you, Paul, and welcome everyone. I plan to touch on construction progress at our sites, our current build-out schedule, and how we're managing supply chain challenges and current market conditions. At our Lake Mariner facility, we commenced mining operations in March by leveraging existing infrastructure at our site off the turbine deck of the now decommissioned coal-fired power plant, where we were able to bring several thousand ASICs online. As I speak, we are completing the final stages of cabling at the first dedicated mining facility in upstate New York, representing approximately 50 megawatts of capacity, which is scheduled to begin hashing here shortly in early third quarter. We have framed out and are targeting to complete the build-out of our second dedicated mining building, another 50 megawatts of capacity, in the fourth quarter, and we should exit 2022 with approximately 110 megawatts of total installed mining capacity at the Lake Mariner facility in upstate New York. At the Nautilus joint venture, our joint partnership with Talen, we have also made solid progress and remain on target to begin mining in the third quarter. We are expecting to exit 2022 at 100 megawatts net capacity, representing our 50% share of the joint venture. As a reminder, we will report our results on expectations on a net basis. As for the balance of 2022, we have an aggressive second half build-out schedule to achieve our goal of 210 net megawatts of installed mining capacity that could support between 6.3 exahash and 8.2 exahash per second of mining capacity exiting 2022. Our infrastructure ramp at our existing sites is expected to continue through 2023, with TeraWulf targeting to exit calendar year 2023 with 400 megawatts of infrastructure capable of supporting a hash rate of 12 to 15 exahash per second. To help drive this aggressive schedule, we have recently added Sean Farrell to the TeraWulf team as Vice President of Operations. Sean joins us from a career at Siemens and is also a longtime energy industry veteran, and I believe he will be a critical component in helping lead our digital infrastructure operations and achieve the aggressive expectations going forward. We remain confident in our ability to execute our infrastructure goals. However, I cannot reiterate enough the importance of reliable and low-cost power in this market. Never before has the cost of energy been more important to the Bitcoin mining cost equation. The impact of these recent market dynamics are having on our peers reaffirms that our vertically integrated strategy and low-cost, zero-carbon resources will provide the most sustainable, efficient, and highly flexible platform to scale. Natural gas is over $8 an MMBTU, up nearly 200% in one year. In light of the prolonged market dynamics, we have begun to take a more flexible approach on miner deployment and procurement. While we have a significant number of miners contracted for purchase, we are evaluating opportunities to leverage our digital infrastructure through hosting or host-to-own arrangements to fill these available plugs more quickly and more economically. To account for this valuable operational flexibility, we have provided a range in our exahash targets for 2022 and 2023, which Patrick will touch upon. Moving forward, we are headed into a time of strong infrastructure growth at our two facilities. Given the scarcity of operating digital infrastructure, the market continues to present various options to leverage the plugs that we have available. While our priority is to self-mine, we will continue to evaluate ways to achieve the highest financial operating leverage from our low-cost power supply and digital infrastructure. As Paul has coined the term, TeraWulf has the plugs. With that, I'll pass the call over to Patrick to provide an update on our recent financial activity.
Nazar, Paul, thank you. Let me start by saying how pleased I am to join the team at such an exciting time in the company's short history. Since starting in April, we have been aggressively working to identify the most efficient and most impactful ways to finance the significant growth opportunities that Nazar outlined in his remarks. Exacerbated by the macro and geopolitical backdrop, the capital markets have proven challenging for everyone in our industry. However, we've identified a number of possible opportunities to help Wolf close the financial gap and cross the finish line. As Paul commented on earlier, we recently announced the two components of financing, including a $50 million standby equity purchase agreement with Yorkville, for which we took a $15 million pre-advance, and we reached an agreement in principle with our existing lenders for up to $50 million of debt, of which $15 million is expected to be funded at closing, subject to final documentation and various closing conditions. This brings the total capital raised by TeraWulf to approximately $356 million, in what has proven to be an increasingly challenging backdrop. These recent proceeds will be applied towards completing 210 megawatts of infrastructure by year-end, with a corresponding hashing capability of 6.3 to 8.2 exahash per second. As Nazar mentioned, we continually evaluate alternatives to most efficiently finance the next stages of our growth. We are approached almost daily with proposals to utilize our valuable infrastructure, particularly at Lake Mariner. Accordingly, we are considering bespoke options that would allow us to ramp our hash rate more quickly while balancing the impact to our capital structure. In terms of cost structure, Nazar reviewed our power strategy and why we are expected to have some of the lowest costs in the industry at term, which will support strong margins. We are also extremely focused on our operating costs, and now that we are transitioning from construction to operations in what should be a more predictable cost structure. While the market is incredibly dynamic right now, the one thing we can truly control is infrastructure, which is where we are focused. With that said, our outlook for this year and next is currently as follows, and this appears on slide 12 of the presentation filed today on our website. For year-end 2022, we expect total infrastructure capacity of 210 megawatts, with a total hash rate capacity of 6.3 to 8.2 exahash per second, with a targeted power cost of 3 cents per kilowatt hour, and SG&A and OPEX of 30 to 45 million. For year-end 2023, we expect total infrastructure capacity of up to 400 megawatts, total hash rate capacity of 12 to 15 exahash per second, targeted power cost of 3 cents per kilowatt, and SG&A and OPEX of 40 to 45 million. Finally, before I hand it back to Paul for closing remarks, there is no doubt that access to capital is challenging in this market. We remain nimble and will continue to identify opportunities to efficiently fund the significant hash rate ramp we are planning for the second half of this year. But we are not done. We still have work to complete the balance of our funding need in 2022 and provide some cushion for growth capital, which we estimate to be approximately 45 to 85 million, depending upon the assumed price of Bitcoin. We have a 200 million ATM and a 50 million SEPA in our toolkit, which we plan to use opportunistically. We also recently engaged 2 financial advisory firms, Cantor Fitzgerald and Ducera Partners, to assist us in raising transformational growth capital in 2022. With that, we should be off to the races. Thank you very much. Paul, turn the call back to you.
Thanks, Patrick. As I look back at a short history, I am reminded that at this time last year, we were preparing to announce our merger agreement with Iconics, which enabled us to become a public company. We now have miners hashing at our Lake Mariner facility, and we are furthering construction at both sites. I am extremely proud of the progress of our team and the effort they've made to bring us to this point, despite the persistent challenges presented in today's constantly changing and volatile market. I also want to thank you, our shareholders and investors, for believing in our management team and the vision of a sustainable, vertically integrated mining future. This brings to a close our prepared remarks, and we appreciate your participation, and we thank you for your continued support. We are pleased to pass this call now on to the operator, who will open the line for questions.
Thank you. We will now begin the question and answer session. To ask a question, you may press star then 1 on your telephone keypad. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then 2. At this time, we will pause momentarily to assemble our roster. And our first question will come from Lucas Pipes with B. Riley Securities. Please go ahead.
Hey, good afternoon, everyone, and thank you for taking my question. I appreciate all the detail in the deck. On slide 26, you have a nice graphic showing sources and uses of cash, and I wondered to what extent potentially negotiations on the minor costs could factor into bridging the funding gap. Thank you very much for your perspective.
Good afternoon, Lucas. It's Nazar here. I can start, and Paul and Patrick may jump in. As you know, we have a couple of different large orders. One is a 30,000 X19J Pro order in Nautilus, 15,000 net miners to us. That order is largely complete. So in terms of pro forma needs for cash, there is a nominal amount of cash required to complete that order, and doesn't provide much of an opportunity. The other area is we have a large S19 XP order for deliveries in the latter half of this year. The structure was under the Bitmain max price arrangement, and so Bitmain a month before delivery sets their reference price for that batch. Given the current market conditions, given the economics of mining, we expect the price on those miners to be something lower, and probably in a fairly meaningful way than the max price under those agreements. And so we have discussions ongoing. I think over the next month or two, we will start to see where those numbers come out. What we have done with respect to our kind of capital needs is not take a view on that, but that could be an area over time. But I think it will be dependent upon how that reference price starts to come out.
This is Paul Prager, Lucas, and I think that's a pretty complete answer. I would just want to sort of almost broaden the scope of your question to tell you that our energy infrastructure first has enabled us to sit here today. While we are clearly concerned about the volatility and direction of the market for the moment, but it enables us to be very flexible because we have the infrastructure that will provide for opportunities if they come forward in terms of miner supply, we have the plugs. So I think that plugs are equal to capital in an important way. And to that extent, we haven't factored that into this presentation, but we would hope to be in the position to be somewhat opportunistic.
That's very helpful. Really appreciate the color on this. And then two quick follow-up questions. The first is in terms of your mining, Bitcoin mining cadence over the course of this year. I'm not looking for precise numbers, but can you roughly walk us through the cadence, kind of end of Q2 here, end of Q3, end of Q4? Ranges would be helpful. And then the second question, you mentioned the host-to-own model. Can you elaborate a little bit on that and how soon we might see more updates on that initiative? Thank you very much.
Sure. Nazar, why don't I take the first part of that, and then maybe you can take the second part, if that's all right?
Sure.
So, Lucas, with regard to the commercial ramp, I think you'll see this, frankly, in our presentation on page 27. But we have a range of gross margin, and that obviously depends upon Bitcoin price and then just the timing of the commercial operations. We have two very large sites with a ton of contractors working hard to complete them right now. So I can't be too specific on that sort of ramp up, but I would tell you it is heavily weighted to the fourth quarter. So as you can imagine, these sites are coming up online, and Nazar can talk to specifically, we're sort of completing various buildings, as he mentioned in his remarks, and energizing those pieces of the facilities, and then, plugging in miners and bringing them on. So I think without, sticking to one specific schedule, I would just tell you that the vast majority of that gross margin is in the fourth quarter. I hope that's helpful. Obviously, okay. And Naz, maybe you can address, if you would like to, the host-to-own model. And Lucas, also, just for your benefit and for others on the call, we did include a page in the presentation that I'm sure Nazar will refer to, but I think it's page 14 as an example of kind of what some of these economics look like.
Thank you.
Thank you, Patrick. So Lucas, under the host-to-own structure, there's two main components that underlie that structure. First is just miners getting delivered to the site, plugged in and operating. And from an economic perspective, we then benefit in two ways. One is a host fee that's paid for those miners, and the second is what I'll call a monthly buy down. So every month that goes by, there's a certain $1 per terahash buy down that occurs on the ultimate purchase price. And so we think this is a efficient way to balance kind of the near term of generating cash flow through the existing infrastructure with the optionality to own the miners. And so if we play this out over a 6, 9, or 12-month period, we could have a meaningful discount that comes off of the purchase price of the miners. And so on page 14 here, we've assumed kind of an annual figure of around $20 per terahash per miner. And so if we were plugging in miners today, we would then have the ability to host, earn kind of a host fee for the intervening time period, and at the end of that term, then have the optionality to purchase the miners at a price of $20 per terahash, less than the headline number. So again, we see this as an efficient way to balance the value of the underlying infrastructure today, while providing the optionality to ultimately own that miner. And further, when that purchase occurs, it's a very efficient flip. $1 comes in and it immediately becomes hashing capacity in the back end. So again, we think this is an interesting and unique way to take advantage of our infrastructure with the availability of miners in the market today.
Yeah, Nazar, Lucas, if I may, just to add one thing on page 14. So as Nazar mentioned in his remarks, this market is changing daily. And so on page 14, what we tried to show you was an example of effectively, our power cost being 3 cents and then a hosting rate of 6.5. So effectively a 3.5 cent margin. That market has changed today to be a spread to your power cost. And the power cost, obviously, if you don't have a fixed power cost, the spread would move to your realized power cost. And then that profit margin as well, on the middle of the page, as you see the profit share hosting, that's moving around as well. I would say 15 to 20% is closer to what we're seeing today in the market.
Gotcha. Okay. Thank you, everyone, for the color and best of luck.
Again, if you have a question, please press star then 1. As there are no more questions, this concludes our question and answer session and also today's conference call. Thank you for attending today's presentation. You may now disconnect.